Welcome to the Fastmarkets Live Lounge. I'm Harry, founder of Graphite Hub, and today we're here at the 17th Battery and Raw Materials Conference hosted by Fastmarkets in Las Vegas. And today I'm joined here by David Christensen, Managing Director of Renascor Resources. So welcome, David.
Thanks, Harry. Great to be here.
It's great to be doing this face-to-face. So there's a real buzz this week around battery materials, but we have to admit that it's been quite a tough time for investors and just the general investor space at the moment around critical minerals. But being here this week, you can sense the renewed interest in critical minerals. And I saw quite a fascinating stat earlier on this week that China controls 98% of the active anode material market, which goes to the core theme this week of ensuring secure and resilient supply chains. So from the conversations that you've been a part of this week, what is the recurring message that you're hearing around this?
Yeah, there's really two sides to it. On the one hand, I think you're absolutely right. There's a lot of bullishness on the growth of the sector, notwithstanding a lot of the geopolitical uncertainty, the inflation, this Chinese dominance. The sector's growing, maybe even in spite of it. EV sales are up. And I guess one of the most encouraging we're seeing is the growth of energy storage systems and its the overall importance of where lithium-ion batteries are going to be. So the macro dynamics look absolutely outstanding, probably better than we expected. Even in terms of EV sales are up globally, not just in China, in Europe, even in the United States. But the backdrop to all of that is the Chinese domination, and this is largely a lithium conference, and we see a lot of the talk with lithium where you're seeing pricing very difficult. The Chinese aren't buying material, and it's putting a big question mark over where the industry is going. Graphite is really a microcosm of what's happening in the overall space that is really exaggerated, like you say, Harry, because of the Chinese dominance, where the price points over the last 2 years have just been pushed down to levels where it's not only the anode companies, but the intermediate processors in China aren't making any money. They're operating at negative margins. And this, it quite clearly isn't sustainable, and it's only increasing the West's reliance on the Chinese, and it's gotten to the point where it's not just Chinese dominance, like you say, it's near monopoly control. And the backdrop to all of this is security of supply. Where's the additional material going to come from? And it makes it difficult from an investor's perspective, because we can say we've seen sort of from a pricing perspective the bottom of the market, but we really don't know how we're going to emerge from it. And so much of it depends on the geopolitical story and what's going to happen with tariffs in the United States. And it's that kind of uncertainty that makes investment decisions difficult, but it also creates opportunities for the companies that can emerge from a difficult period and have a strong investment case moving forward. So similar to what we've seen in graphite, in particular over the last couple of years, it's a difficult current market, but the medium-term outlook looks good. And so really what most of us in the sector are trying to do is how do we manage this short-term difficulty in order to get the larger-term returns we all expect to come.
Right, okay. And obviously around these conversations around resilience and secure supply chains, it's once again highlighted just how important graphite is in the supply chain. If you don't have graphite, you don't have an anode. If you don't have the anode, you don't have a battery. And this is one thing I really struggle to understand, is that people just aren't aware of this, and there's just a lack of interest in this. So why do you think graphite hasn't got the spotlight, but what opportunities does this mean?
Yeah, look, I think it's because of the Chinese dominance again, because largely the end users, and let's call the end users ultimately the OEMs, have been able to purchase the material from China at a relatively low price, and we haven't had the degree of price transparency that we've seen, for example, in lithium, where we've seen a number of spikes over the number of cycles, really, over the last several years. We just don't have the price transparency in graphite, and it's kept interest down for that reason, because of the Chinese dominance. And I think that's been the fundamental issue with graphite, but that's also the opportunity. because we can't continue with this degree of Chinese dominance, because the risk for the West is you simply won't be able to build a lithium-ion battery. Like one thing that's quite clear is no matter which way we go from the battery chemistry, and whether we move from NCM to LFP or any of the combinations thereof, for EV and for most of the ESS applications, we're going to see graphite in there. But with the exception of some minor production we're currently seeing out of Japan, and what POSCO is doing out of South Korea, the Chinese are just dominating the sector. And if they stop providing material, it would grind the rest of the world's production of lithium-ion batteries to a halt, which simply isn't acceptable. And so again, that's the problem we're seeing is, well, how do we deal with the difficult situation now? But the opportunity is something has to change, because the Chinese situation isn't sustainable, but nor is it replicable outside of China.
Yeah. Okay. And so, yes, China dominates the market, but unless we see more companies doing what Renascor is doing, and that is to become vertically integrated, we're still going to remain tethered to China for the final steps that determine battery readiness. But building a vertically integrated company is challenging, right? So would you mind just talking through some of the challenges that you've faced throughout this process?
Yeah, so I guess we've taken it in steps. So as you know, we discovered a large graphite deposit. It grew very large, and we've gone through the feasibility steps to really try to ensure we could produce that material at a competitive price to anything ex-China. The next step is trying to open up the market, and I guess for us the obvious step was by vertically integrating, we could take advantage of the fact that we had a low-cost resource in the kind of jurisdiction that would justify the capital investment needed to do the downstream production, and had the industrial capacity in place to get it there. The challenge from a market perspective is it takes time. It takes time and effort and money to go through the various steps. On the mining side, there's a very well-trodden path that mining companies go through to get their mining operations up. But if we look at graphite historically has been an industrial mineral, and it's only making that transition now to a battery mineral. And when we sort of look at what's the market that justifies public companies to invest hundreds of $millions in a new project, for us, it became quite apparent early that the best market, and maybe even the only market that can justify big new resources at scale, is the anode market. And when we look at the anode market, again, Chinese domination, all of the refining is done in China. So the challenge is can you get something up and running and do it in an efficient manner? I don't think that Western companies are well placed if they're trying to compete with China on price, especially in the current market, because it's become really an anti-competitive market where the Chinese are operating at negative margins. But the opportunity is to see if you can put together a business case where you can take your material and do one extra step of refining at the right cost. And so the challenge of something in graphite is historically the Chinese have used a process that is efficient in China, but it doesn't necessarily translate outside of China. And that's largely in relying on hydrofluoric acid to do their purification, which works quite well. And so the challenge for us has been sort of to pivot to be not just a mining company, but to go through the advanced steps and to try to get, what I'd call a technological advantage. But really the technology is in adopting existing technology and engineering it to Western standards. And this takes time. Yeah. And in a fast market, you don't want to take time to go through the steps, and it's not very exciting to build pilot plants and demonstration plants and demonstrate the cost basis, but it's really necessary to travel through those engineering steps in order to demonstrate the low cost basis. And so I guess the challenge for us has been taking the additional time, having to raise capital, and then really commit to a multi-year process. But the payoff is if we're correct about our own technology, and as you know, we're building a demonstration plant now, what that'll do is it'll unlock an added advantage and put us in a position then to be amongst, if not the lowest cost producers of the project, of that product globally.
Right. Okay. And so, kind of elephant in the room at the moment, graphite prices, they're at historic lows, and it's the biggest constraint we're seeing in the sector right now. Many projects are struggling to move forward. Are you hearing anything positive in terms of graphite prices and where they're heading?
Yeah, so graphite's gone through, a lot of ups and downs and more downs lately. 2 years ago, we saw relatively high graphite prices that would green light not just our project, but other projects from a mining perspective. Then we saw after the IRA, we saw a lot of promise, a lot of focus on the United States as being a new market, but we didn't see the development of new midstream operations, and instead what we saw is the Chinese stop really purchasing material. It didn't take a lot of Chinese purchases 2 years ago to drive the price up to really double where it is today, and relatively small volumes, $15,000 tons a month, really drove the fine flake prices up above $800 a ton. What we see now is the Chinese have simply stopped buying the material. They're opening up their own mines in Africa. They're selling it directly to China, so we don't get transparency on the volume of materials that are going through. And at the same time, they've doubled down on the production of synthetic graphite, and it's reduced the anode costs, and it's going to take a while for that to cycle through. So I think when we look at prices right now, we know from the Chinese anode operators that they're operating at negative margins. We see that because they publicly released that information. But notwithstanding that, they're expanding. Like the incumbent anode producers who are currently operating, again, at a loss, are expanding their operations, in particular outside of China, whether it's BTR expanding in Indonesia, Morocco, or POSCO recently making their final investment decision to do purified spherical graphite in Zhejiang, and even Mitsubishi Chemical being aggressive about some of their expansion. So when you look to the future, the fact that the existing anode players are expanding, and they're getting direct transparency with their buyers, with the cell makers and the OEMs, to make the capital investments. And so I think what that tells you is the market's already moving for optionality for these ex-China supply chains. We can't predict when these things are going to happen, but we're seeing those investment cases already. So again, how are we going to deal with the low prices now? I think the important thing is really not to waste too much capital in chasing losses, but to look sort of 2 years out when I think there's an expectation that we're going to at least see some initial ex-China graphite. And then the backdrop to all of this is some of the geopolitical tensions we're seeing, largely in the United States with tariffs, and whether that can introduce ex-China pricing.
Right. Okay. And so pricing pressure aside, scaling up is quite a huge challenge. The movement between lab scale to demonstration plant to commercialization is where projects do stumble. So as you mentioned before, that Renascor is bringing online a demonstration plant that is backed by POSCO and Hanwha, who Renascor have non-binding offtake agreements with. Would you mind just sharing what they're looking for with this demonstration plant?
Yeah, so the idea in the demonstration plant is before we build a larger scale commercial plant, we're adopting an existing technology, but we want to climb up the technical readiness level. We've done it at lab scale, we've done it in pilot using our flow sheet in China. And now what we want to do is we want to build that at a larger scale in South Australia using the exact flow sheet that we'll be using in a commercial plant. And so the goal here is to demonstrate not really that we can produce the product. Producing the product, I think, is we're quite confident we can do that. The question is can you do it at a cost basis that's competitive? So the goal of this process is to demonstrate not just to the POSCOs and the Hanwhas of the world, but the market as a whole, that by adopting what we think is a proven technology and engineering it up to Australian standards, we'll be able to deliver that what we think is going to be a major cost advantage, simply because it's a more efficient way to produce the finished product.
Okay. And taking a step back, at Graphite Hub, I track about 84 graphite companies ranging from exploration to production. But the market's tough at the moment, as we both know. But if we're here in another year, I'm concerned at where that number could go. So why Renascor? What differentiates Renascor between them and their peers?
Yeah, look, I think there are a handful of graphite deposits globally that can produce a mine product at, let's say, a tier one cost. And we think we're one of them. We think we demonstrated that through the significant work we've done on the upstream. There are others, particularly in East Africa. And I guess what we see as our potential advantage is, as we start to look for more reliable, secure sources as ex-China supply chains develop, the fact that we're in a jurisdiction like Australia, we think gives us something of an advantage. The fact that we've gone through all of the environmental and regulatory requirements to get our licensing in place, it's a long process, as you know, in a country like Australia. But it's really a badge of honor once you've gone through that. So that, we think, is one advantage, and I think it's one that is sort of proven by the work that we've done. The second potential advantage we see is what we're able to do doing the downstream production. And this is the vertical integrated aspect of what we're doing. And that's what we're trying to unlock with the demonstration plant, where we think that there's a strong business case to be made for taking the material in the existing jurisdiction, limiting the material transport, and upgrading it. And we don't expect to be competing with China on price, but the advantage could be against everything else. So rather than taking material, moving a lot of excess material to a different jurisdiction, upgrading it there, if we're doing it in the same jurisdiction, we think there should be a cost advantage associated with that. And we're probably relatively unique in that we focused on the midstream instead of moving all the way down into anode. We think there's a future for us in that space, but the market's tight right now. And a lot of us in this space right now recognize that markets are difficult, raising money is difficult in this market. Competing against the existing anode companies seems tough to us. But we think there's a niche that we're going to have by having a low-cost mine and then combining it with really what I call an engineering advantage in going through this demonstration plant, and then delivering it directly to anode companies. And our thesis has always been Renascor plus an anode company is likely to be the most efficient ex-China solution to deliver material to the market on the anode space. And so that potential advantage we see starts with the mine in being, one of maybe a handful of assets in the world that could produce graphite at a low cost. But the fact that we're in a modern industrial jurisdiction like Australia, we've gotten the support from the Australian government to move into the downstream, potentially puts us in a unique space in building this first stage refined material at a cost advantage. And we think that gives us an opportunity to be amongst the lowest cost producers of this outside of China. And that we think is perhaps the differentiating factor that's going to leverage us to hopefully get in production relatively soon.
Okay. Well, no, it sounds very exciting what's happening at Renascor at the moment. And so looking ahead over the next 12 to 18 months, what milestones can investors expect to see coming out of Renascor?
Yeah, so we're probably, from an operating perspective, busier than we've ever been, which I think surprises some people because they see the market as being relatively weak. But we took on what's been our single largest operation in building the demonstration plant, and we're well into the procurement of materials. We're expecting to be commissioning offsite some of the aspects of the plant next quarter, which is just months away. And then in the final quarter of this year, we'll be assembling and commissioning the entire plant. And so the primary objective we have over that period is we think there'll be a number of milestones as we start assembling the equipment, as we start commissioning, and then we get into some of the operating phases to to demonstrate that we have potential, not just an advantage on the mining side, but in moving into the downstream. And we think the value proposition then changes us from being simply a mining company to being a leader on what I'd call sort of the technology and engineering side in unlocking that. And we think that's probably one of the significant differentiating factors. At the same time, where we're working on the upstream, really to get us ready to get in production, trying to reduce cost, reduce schedule, reduce risk. So we've been going through a number of different milestones. We've done a significant amount of bigger, long lead procurement items, whether that's buying the underlying land, moving into the grid connection. We'll be moving forward on getting the accommodation camp ready and really trying to line up the ducks in a row to de-risk and optimize that production at the same time. So in parallel, we want to put ourselves in a position that we can get into production at the lowest cost possible as quickly as possible.
Right. Okay. Well, thank you for taking the time, David, to sit down and chat about Renascor and the general graphite market. It's been great as always, and we look forward to following Renascor as they make progress through to production.
Great. Been a pleasure, Harry.
Great.
Thanks very much.
A special thanks to Fastmarkets for hosting this episode of Graphite Hub's interview series. Thank you to everyone sitting here watching live and at home. Feel free to like, comment, subscribe, and share, and we'll see you soon for more episodes of Graphite Hub's interview series. We'll see you next time.